Very interesting conversation there, but let's move on to another very interesting, that's power. Everyone wants power, but the Nigerian power sector, no doubt, has been plagued with structural issues again in all key areas: generation, gas supply, transmission, distribution. In a bid to address these challenges associated with electricity supply in the country, the federal government in 2013 privatized the power sector with the goal of improving power supply to the masses. Now, years later, the fundamental challenge which we face existing, making electricity supply remain largely inadequate. Yes, that's it. Although the country has an installed capacity of more than 12,000 megawatts, it's only able to generate around 4,000, which is insufficient for the population of over 200 million people. Now, poor power supply has continued to remain a major drawback to economic development in Nigeria, despite the introduction of a service-based tariff, which has increased electricity bills by over 100%. The service-based tariff, which is pegged on the premise of improved electricity supply, particularly in terms of increased or sustained hours of electricity supply, Nigerians are yet to reap the full benefits of this development amid privatization of this sector. Mr. Richard Huggs is a specialist in the power sector. Mr. Richard, good afternoon, and thank you for your time. It's good to see you.
Good afternoon to Lopez. Thank you for having me.
Yes, I want to first of all start with this move to reduce the price of gas. That happened sometime last week from $2.50 to $2.18. What does this really mean, and what impact will it have on the sector?
Okay, so let us start off with this, right? So we know that the gas price is a pass-through in the electricity tariff model. And what this means is that changes in the price of gas should translate to changes in tariff. However, the impact of the change in gas price has been leveled out by the changes in the exchange rates. So I very much doubt that the 32 cents reduction in gas price is likely to cause any reduction in tariff. And I would say let's just give it, let's put some numbers to it, right? The current electricity tariff that was published in 2019 was based on a gas price of $2.50 and a gas transportation cost of 80 cents. Now, you may recall that the exchange rate at that time was 309 naira to the dollar. But today's CBN exchange rate is 411 naira to the dollar. So based on this, the price of gas plus that of transportation have increased in naira terms. So if you do some little mathematics and some analysis, you'll find out that the gas component of electricity tariff today, there has been a dip in dollar terms, yes, but there's been a more significant increase in naira terms due to the exchange rate losses. So it's really unlikely that there will be a reduction in tariff because the tariff again is naira denominated.
Now, our gas reserves, recently DPR came out to give us the million standard cubic feet. I don't want to quote any professional like you, we know the exact figures, but there's a little bit of increase, proven and unproven reserves. And some even say we are more of a gas nation than a crude oil nation. Now, what kind of conversations are we supposed to be having so that we can strengthen this? And can it also replace PMS when we talk about full deregulation? Can gas take that place?
Okay, so I would take the first question in terms of our gas reserves compared to crude oil. Yes, our gas reserves are about 3 times more than our crude oil reserves. So what are the kind of conversations we should be having right now? We can be working with NASIMA and the Manufacturing Association of Nigeria in terms of creating more industrial cluster zones, providing incentives to the private sector to push gas to these zones, and then even assisting to build, small gas-fired plants that can even run on CNG tank farms. This will drastically reduce the dependency of the industrial zones to the transmission infrastructure. So without even leaving the discos out, correct? They can also partner with investors to create centers of excellence to ensure stable and good supply of power to these industrial regions. We know for a certainty that electricity constitutes more than a third of production constraints today. But it's not just because of cost, it's more or less depending on stability and quality of supply. So the conversation should be around, creating a connection between gas, power, industrialization, job creation, and then economic growth. So right now, only 10% of grid supply is channeled to industrial customers. However, the industrial customers they don't just pay a higher tariff, but they pay in bulk when you compare them to residential customers. So if that electricity is channeled to these industrial customers, you will realize that the liquidity of the distribution companies will improve, and then the industry will produce more, and then there will be better job creation that would lead to economic growth. However, this all lies on the premise that quality and reliable supply must be improved if industries were to stop using their generators and then use that power from the discos and then pay them for that as well.
It will be unfair for me not to look at the privatization process. Fortunately, sometime last week, I was able to be among the team of the Senate Committee on Privatization, going around discos and generation companies to assess the level that's after 2013 privatization exercise. But at the moment, we're still generating less than and distributing, even at the end till less than 5,000 megawatts for a country of 200 million people. What's your assessment of this process in its entirety? Do you think, like some have said, that there should be a review, or you just think that something is just right about this process?
So right, there's just a gamut of issues within this. I would not say that privatization was the problem, but I would say Nigeria's case has shown that privatization is not a sufficient condition for power sector growth. There are other man-made problems that contribute to this. We can talk about the tariff shortfalls. We can talk about the market shortfalls. We can talk about the MDA debt burden. All these are man-made problems that run against privatization. And there's also, in terms of the government, right? There's been so much regulatory interventions that have decreased investor confidence, right? So in terms of right now, lenders and operators are forced to adopt the let's wait and see approach because really nobody knows what's going to happen next. So I wouldn't say that we went wrong with privatization, but I would also say that there are those other man-made problems that have hampered its success. So we can remove those man-made problems, make it more efficient, then privatization would work in Nigeria.
Privatization will work. Now, my guest that just left the studio, Mr. Robert, talked about market-based scenario that could help address all of these challenges, talking about PMS, talking about power, talking about giving examples of the partnership between discos and some areas where they are paying more and they have more supply. We also know of some of the initiatives by the then Minister of Power before he now, that's Babatunde Raji Fashola, before handing over to Salim Aman, who's there now. We saw some of these initiatives, the likes of Sura Market in Lagos, where they are now using gas, I guess. We have Area Market, I think somewhere in the east, they're also doing that. And Sabongeri Market also in Kano. We see all of these processes and we see fruits. We see yielding fruits, positive fruits, and making businesses easier for people. What more do you think about letting the market control most of all of these schemes or all of these policies that we run?
So I would say that, yes, there needs to be cost-reflective tariff, because I think this is one of the downsizes for the distribution companies and also the supply of electricity. Right now, that the tariffs they're just over-regulated. Let me not, for the lack of a better word. So in terms of allowing the market to play its part, I would say that the government should fully deregulate it and then allow the market forces to determine the cost of electricity. Right now, we have the factors around inflation, even the US inflation. We have gas pricing, and there are other factors that that fall into play right now. So if you begin to regulate this tariffs, you realize that the discos will not always be able to meet up with supply, and that will also translate to the entire value chain of the sector. So I think that it's about time where we allow for cost-reflective tariffs, so that it's easier for people for the operators in business to do this business effectively, and then you could see more steady supply of power across the region.
Now, so moving on with all of these challenges that we face, what more do you think? Let's look at the aspect of metering and estimated billings. That is what Nigerians are always quick to react to this. It was the first, which was MAP, I think the metering asset provider scheme that was instituted, but later government has taken over, central bank supporting the discos. looking at the debts, you see MDAs owing billions of naira to some of these discos and metering on one side, estimated billions on one side. I tend to be so worried. What do you think can also be done so that we get to a point where everyone pays for what he or she consumes?
Sure, that's a very good one, and I think it's one of the burdens that has been on every Nigerian's mind. When will I get a meter? When will I get a postpaid meter? So I think for me, metering has always been the job of discos, right? And then this is clearly stated in their terms and conditions and when they are provided licenses by NEC regulator. So, but if the government had followed, the reform model, right, by giving discos a cost-reflective tariff from the very outset, as well as giving the regulator the power to, expel or flush out any non-performing operators, then the discos will have no excuse in terms of providing meters to consumers or to their customers. But instead, we realize now that the government has taken other, policy interventions that have run against the reform model. You mentioned, you mentioned MAP. There's also CAPME. There's also the NMMP. All of these policies, all of these interventions have just removed the burden of metering from the discos. Right. So now customers are pressured to ask for meters to avoid estimated billing. The government is still trying to keep on giving concession to the discos. So I think personally that the way out would be for us to empower discos again with a cost-reflective tariff. Now, when you empower them with a cost-reflective tariff, you empower the regulator to ensure that they can sack or take back a license from any non-performing operator, while the government itself should concentrate on policies that will stabilize the tariff escalators. Those tariff escalators, include things around your gas pricing, things around your exchange rate, inflation, or even the volume of supply to the market. So I think that would help with, if you give distribution companies that cost-reflective tariff, and then they know that somebody is watching, there's a regulator watching, they will definitely sit up, right? And then you would see that meters will be rolled out easily, and then everybody will play on a level playing field. Now, you asked a question about the MDA debts, right? So my opinion, and this is my personal opinion, I think that there can be a payment plan that can be structured with each of those MDAs. Because we're talking about billions and billions of naira that are being owed by these MDAs to these respective distribution companies. So if there can be a payment plan that you can set up or you can structure in collaboration with the Ministry of Finance, that would really go a long way in establishing like a roadmap to payment. This could be things around, direct debits to the MD allocations every month or every other month. But in the long run, this will cushion the effect of these debts over time.
I think that's a good one. I think there was a time the former minister again was trying to put up something like this, but I don't know how effective that actually was, talking about clearing this debt once and for all. Now, before I let you go, many say taking advantage of gas again can help industrialize our country. But sometimes I wonder, do we have that infrastructure on ground to actualize this? Because gas production, development, and all of that is not cheap, my brother.
Yes, very, very much so. So I would say that this boils down to infrastructure, as you just mentioned. So the infrastructure requirements to replace an existing petrol station with a gas station is near impossible over the next decade. We understand right now that the government aims to convert 1 million automobiles to gas engines from petrol engines. However, since these engines are not dual fired, right, then you're not going to be using gas at the same time using petrol. You're going to have to use one. So adopting that gas engine means whenever you're going out, you have to travel to an area where you know and you're sure of availability of a gas station. So I don't think it's very much about price that will determine the dynamics of gas, but more about the infrastructure logistics that is very, very important. So questions around, will the existing filling stations be able to dispense gas to a gas power car? Will gas be distributed by the current fuel tankers? Will gas piping also go to rural areas to supply those filling stations? These are the questions that need to be addressed. So we know that, yes, as we're adopting gas, there is a long-term plan to phasing out electricity or having an alternative to PMS.
I think it's a good way to leave it. It's the first time on the show, and we thank you so very much for joining us. I've been speaking to Mr. Richard Hurst. He's a power sector specialist. Thank you very much for spending your afternoon with us. Enjoy the rest of your day. I will do call on you some other time when we have something to discuss with regards to the power sector.
Thank you, Tolulope. Nice having you. Thank you.
All right, enjoy the rest of your day.